is, how do we take some of the innovations like crypto, like perpetual futures, and take that to traditional assets? So it's also like, first of all, I think there's products and innovation that can go downstream into TradFi. So for example, I think an equity perpetual future is a better product than a CFD or an ETP. And those are typically how retail engage with equity derivatives right now. And so, this whole concept of, actually being able to list equity derivatives and do perpetual futures, I for sure see a world in the future where actually equity perpetual futures are the mainstream way of trading equity derivatives.
Welcome to the NFT and Web3 Insider podcast. Today is a special episode in English. So for my German speaking audience, please go to YouTube. You can find the German subtitles there as well, and make sure to subscribe to the newsletter where I will share some insights from this conversation also in German. So for everyone else, just stay here. We have a special guest. It's Josh Barraclough. He is the CEO of and founder of One Trading, and One Trading is the next generation trading venue, which is also regulated. So there are like a few advantages or like game changers Josh can tell us about and lets us dive into with him. And I can pick Josh's head about like how the relationship between traditional finance and the crypto space will evolve in the near future. What will happen, what like both spaces can learn from each other, and what, like, for example, products he sees that are currently in development, what will happen there, and also like how cryptocurrencies are playing a role or will play a role in traditional finance, if we are heading to a bull market or not, and Josh's advice for it. So a really, really interesting conversation on so many levels. I took so much out of it. So without further ado, let's dive right in. Let's go. Josh, welcome to the NFT and Web3 Insider podcast. So happy to have you. So happy to talk about like the next generation of trading. But before we dive in, so yeah, welcome. How are you today?
Good, very good. I'm currently dialed in from a hotel in Brussels, so kind of probably speaks a little bit to the fact that always somewhat on the road at the moment. I think just traveling around Europe, meeting clients, meeting lots of different people, but good to kind of be about. So yeah, thanks for having me. I'm very excited to be talking about things.
Yeah, me too. So probably this conversation will be easier than the ones you have with like regulators in Brussels and so on. But yeah, before we dive in, maybe please shortly introduce yourself. Who are you? What are you doing? So what are you up to today? Or just
So thank you. So Josh Barraclough. A lot of people struggle with my last name. Actually, I've heard lots of different variations of it, so it's probably worthwhile myself saying it. But I am the CEO and founder of a company called One Trading. We are I'd say kind of really a group of predominantly ex-TradFi guys and girls, with kind of a blend of a few kind of real crypto enthusiasts built into it. We're building kind of what I would kind of class as like next generation trading technology. We're an exchange. We're kind of introducing new licensing frameworks and really looking to kind of bridge this crypto world and the traditional finance world, and take really kind of the best things that exist in both of them, and have like a really great customer trading experience for retail customers and institutional customers. So that's kind of really where we're at. I obviously have a wealth of experience from the traditional finance world, and I've been in the crypto world now for coming up to like it's 3 years. It's gone quickly, but it's coming up to 3 years now. So yeah, fully entrenched. But yeah, I was JP Morgan, for my sins. I think that's usually how a lot of people look at it in the crypto world. But actually, we were doing some pretty cool stuff there beforehand. So and then I spent a couple of years at Bitpanda, but we can jump into all of that. But yeah, it was
let's dive into, because I think it's very interesting, like to have the transition and how you come from working at JP Morgan. And I mean, I think you have some you did some like digital strategy there, so it's probably close to like innovation and crypto and stuff like that. But I think it's really interesting. And yeah, as you said, like 3 years feels, I think in the crypto space it feels like 30 years or something. So
it's a lifetime. Like my hair's a grey hair. Like, I came in with like just purely thick brown hair, and it's all going grey. Yeah. I mean, look. So, I mean, the stuff. Look, the stuff we did at JP Morgan was actually very cool. So at JP, I ran digital innovation there. I had kind of a bit of a mixed remit. So by the end, I was looking after digital strategy. So really, for the corporate investment bank and the international private bank, it was very much what are the kind of the businesses that we want to build? What are the key markets we wanted to be in? What are the areas we wanted to disrupt? What's the new tech we wanted to introduce? And what we did is we came up with all of these different strategies. So it could be kind of big infrastructure plays. It could be launching a new business line. It could be kind of like radically optimizing our kind of own cost base, because we were spending, $7.5 billion a year in people costs on tech and ops, right? And which is a lot of money. So like lots of different things, and then within that framework, we'd come up with ideas, and then to execute against these ideas, because I think a lot of the time it's like you have the ideas, but you want to kind of execute on them. We would invest in companies. We did a lot of corporate VC. We did M&A, so we bought companies as well. And we did incubation. So we'd kind of incubate ideas and companies from the ground up, build them, launch them to market. We might then kind of like seed them and get investment from some of our peers and kind of build a bit of, I guess, kind of a consortia setup where we'd have all the right players in. So it's very much kind of, coming up with the new ideas for the bank in terms of what we wanted to do, and really kind of on the bleeding edge of what was happening in the industry, right? So, I would start on the board of a homomorphic and a fully homomorphic encryption and multi-party computation company. This is 5 years ago, right? So this is before kind of like I guess kind of you kind of a lot of the banks are kind of talking about mainstream kind of crypto adoption or things like that. We were looking at how can we use these tools to do things like privacy preserving, data computing with some of our peers about sharing data models and doing some cool things around that. So, it was always kind of on the cutting edge side of things, but really kind of like how do you kind of entrench the business? And obviously from that, I guess I had a good understanding of what was happening at a kind of a macro level, what was happening at an innovation level, really kind of, but a really fundamental and thorough understanding of capital markets. So kind of how these things kind of interlinked and would play out over a longer period. So that was really my job, and I did that for 5 years, which was good fun. I really enjoyed it. And then someone kind of phoned me up one day, and actually they're an investor in a company called Bitpanda, and they said, look, we're looking for a CEO for the exchange. Think your profile fits the bill. Are you interested? And it's funny. It's not really something I'd actually thought about doing. Right? It wasn't one of those things where it's like, actually, yeah, this is my plan. And then had some conversations, met the founders, and spoke to my wife, and then did kind of like did the diligence, right? And actually, I was like, it's a really cool idea. I liked what they were doing. They'd just been funded, so they just raised $4 billion. And they were kind of really on a trajectory towards an IPO. And I was like, do you know what? This seems like a good time to join a fast-paced, very different company and build something different. So off I went into crypto world. That was
when was it? Like 3 years ago, approximately.
So that was yeah. So two and a half, 3 years ago. The everything moves so quickly here. I kind of go, I'm 2 years into this, and then all of a sudden it's 3 years, and so I'm gonna go. I think it was around 2.5 years. We're coming up to now. So yeah, I think that sounds about right. Yeah.
Yeah, I think what you just described, like your work at JP Morgan, it's often, I think, underrated, especially from or within the crypto space, that all this traditional finance is moving very slow and they don't understand things. I think it's, you see that there is so much going on and they're paying attention. And you're the best example for that. And then also to build the bridge, I think, is so important, to connect those worlds. And I mean, who could do this better than someone who has like this experiences firsthand in both. And I think Bitpanda is also quite, I would say, like a lot of people know it and use it, but it never has been one of the like the FTX or like always in the news, right? But it's just there, and I think there's like a lot of innovation going on. There's a lot of, especially like the structure and the like doing the homework, right?
Yeah, I think that's right, and it's a good company, right? And I think what they've got, and this probably it's like a good segue into kind of how I moved out of Bitpanda into One Trading. But you know what they had when I joined is they had a very impressive like neo broker. So kind of really really kind of Robin Hood esque. Big green button. I want to buy an asset. I want to do it as simply as possible, and I want to buy equities or whatever it is. I just want to have very simple, holistic investment structure broker model, which is cool. And then they had exchange, which was kind of something that was, I'd probably say, a bit unloved. And that's why, like if you compare it to FTX and others, it was there and it existed, but it hadn't really progressed like significantly. It wasn't really that competitive in terms of kind of what was out there. And so obviously my job was to kind of like come up with okay, what do we do to kind of really change this? And as you say, I think they've got some really smart people there as well. They've done some really good stuff, but you almost have this like splitting of the ways a little bit, where the mothership in terms of Bitpanda really needs to focus on building the broker and like this holistic business model, and then you have this kind of exchange kind of becoming more and more separated in terms of actually how we were running it, how we were operating it, and the people we were bringing in, right? Because it's actually slightly different, like culturally and from an organizational setup as well. So we kind of went down that route, and I think that kind of worked quite well for a while. And then obviously you have this crazy market backdrop, which was like fun for everyone, right? I mean, SBF just taking down the markets, and the markets in general suffering. And I think at that point it became clear that from my perspective, that for the exchange to be successful, it needed kind of material investment to kind of get it to where it needed to be. So obviously that kind of triggers me having a conversation with the board and saying, look, guys, like this is great, but in order for the exchange to kind of hit the vision of what I think we need to do to win the market, like we need capital, we need a different structural setup, we need a different team setup, we need a different tech setup, and we're not going to get that here. So kind of with the blessing of the board, I went off to go and raise money to basically separate the two entities. Which was again like huge thanks to FTX for making it super easy for me to raise money. So yeah, I was always like very grateful of that. So yeah, we raised 30 million. We had some really good investors who came in the end, and then as part of that, we did this structural separation where we bought out the kind of the majority of the Bitpanda shareholding, and Bitpanda's ownership as a whole has been kind of taken out of the company. And then we kind of set about on the kind of the vision of what we wanted to build, which is what we've been doing for the last I'd say we've been building it now for the last 2 years. We're finally at the point now where the things that the real USPs we've been working on are about to hit the market, and so that's why it's getting a bit exciting now.
Yeah, maybe it's just the right timing, right? So like the whole space is getting euphoric again, like the prices rise again. The SBF is found guilty, so this chapter is closed, hopefully. And I mean, if you can raise like money in that in that time, you can it's like New York, right? If you can make it there, you can make it anywhere.
Yeah, exactly. The scars are real. They're there. They're there.
But yeah, let's dive into One Trading. So, what is your vision behind it? So, or like you found it and you get the investors on board, and now you're like taking it to market. What is your like vision and mission behind One Trading, and what makes it so special?
So this is cool, and this is I kind of there's two things I kind of geek out about at the moment when I'm talking to people, and I think when I talk about this concept of bridging, traditional finance and crypto, there's the first thing, which is tech. So let's just talk about tech for a second. I think the where traditional finance is pretty good is actually a lot of the tech that's been built has actually been very, very good. And it's like good, very efficient, quality execution, like super low latency, like a lot of the things that actually haven't really made it mainstream into the crypto industry. And a lot of that's because of like where retail interacts with a lot of these trading venues in terms of like cloud setup, and it's harder to innovate and kind of get real efficiency in a lot of these things. So one of the things that we wanted to kind of bring first of all was kind of like let's bring the best in class tech to the market. So what we have right now is, and kind of like start from where we were, which is we had what I call like the legacy Bitpanda exchange that was live, and then we had to go through this process where, as we decoupled from Bitpanda, we had to rebuild obviously all of our blockchain infrastructure, our fiat rails and infrastructure, our operational tools, our compliance tools, our onboarding, like front to back, everything, right? So everything gets built and gets plugged into the new trading venue. We've then kind of been working on, and this was kind of a really important thing, we hired some absolutely fantastic quant engineers, and we've been working on building what we kind of have been classing as this next generation trading venue. And we've built now, and this is really cool, and this has been tested by AWS. So I'm quoting their test results here when I say this, and they'll be publishing in their blog. We've built this trading venue where we have a latency, or kind of a latency of 1 microsecond on the matching engine, and 72 microseconds for a round trip. And I'll just explain what that means, right? So a microsecond is a thousandth of a millisecond, and a millisecond is a thousandth of a second, right? So that kind of gives you like where you're talking in terms of latency.
It's very, very fast.
It's very, very fast, right? And so it's funny. So I'll give you a good anecdote in a second. And we tried to visualize how fast it was, and it just looked silly. We actually, we had my UX designer put together this graphic where we were trying to compare ourselves against other venues, and it was so fast it looked silly that we actually just ended up writing. We tried to create a visual here, but it was too fast and it looks too silly. So we're just telling you it's fast. But basically, to contextualize it, you have, if you look at kind of like the market leading trading venues at the moment, like the Krakens, the Binances, the Coinbases of the world, typically the type of latencies you're seeing there for a round trip, and a round trip is I discover a price, I place an order, and I cancel the order, or it could be, the order is booked and my balance is updated, but that's kind of, in theory, kind of a round trip, right? The typical latencies you're seeing for a kind of like the existing market leaders is like 7 to like 25 milliseconds. And that's when they're like operating well. If it's like very, very busy market, those latencies jump up to like 100 milliseconds, right? So you're talking like somewhere between like 7 to 100 milliseconds. The latency of our trading venue is, it's 72 microseconds. When we kind of tested it at 10,000 orders a second, it was 112 microseconds when we tested it at 400,000 orders a second. So to put that into context, that's 40 billion orders in 24 hours. And basically, yeah, we saw zero application degradation when we ran the 40 billion orders through it, and we had this 112 second, microsecond round trip. Now, really, what that means is, that's roughly 200 times faster than any other trading venue. And that's massive. And it's a really big difference because, if I can do 200 round trips, which means I can discover a price, place an order, cancel that order, and I can do that sequentially 200 times before I can discover a price on another trading venue, you have a huge price discovery and execution advantage. Like that is like, it's apples and oranges, right? Or it's more like apples and aeroplanes. It's like you're kind of in a situation where the arbitrage opportunity between the different books and the different structures is massive. So that was kind of like the first thing, and really the goal here was we wanted to build something that was really, really reliable from a price discovery and execution perspective, such that actually we can really kind of set the tech standard for, if you want to trade on a high quality venue, this is where it's going to be. And what we're doing, I guess, kind of coupling with that is, we're actually making this for spot trading completely free. So we're going to offer this out to everyone as kind of a launch. It's completely free, make a take a zero. And the goal is we want to pool as much liquidity on the platform as possible. So we want like people to come and trade, users as kind of a risk exchange venue. That is how I kind of look at it. Of like, the big liquidity providers exchange your risk. Like if you're a retail customer, come and trade, access like deep liquidity, super fast execution. with kind of, zero spreads and an incredibly kind of efficient kind of way of trading. And like, it's not just the fastest, back end from an API perspective, it's the fastest front end as well. So if you're like doing a click to trade, it happens so much faster. The only limiting factor for our front end is the speed of light. Is the kind of the joke that we have, because actually that's what it takes to kind of book a trade on the front end, because obviously that's the physical limiting factor, because you're going through the GUI. So you have like this insanely fast execution experience for all of our customers who will be trading on this venue, and as I said, it's kind of like it's really used. So that's kind of like the first part, and we were very much like we wanted to make just a really good trading experience, and we're going to for launch, we're actually going to reduce the number of pairs we have on the exchange. We really want to consolidate liquidity on a number of pairs and actually like become the market standard for kind of some of those markets. And we've got some really big liquidity providers coming into trade. They see the value of what we're building, and they're quite excited about this as well, and geeking out about the tech. So that's kind of like one side of the coin, which has kind of always been I guess kind of very near and dear to our heart. It's like really good tech. The second,
that's awesome already, right? For the like normal investor, like it's a kind of unfair advantage, but also for like institutions. I mean, it's just like, as you said, the crypto space like professionalized, right? And with all the experiences you brought from traditional finance and the standards, and now it's just an unfair advantage. So okay, what's the second?
It's cool. Actually, just on that, I was having I had a coffee with the guy who used to run the derivatives business for the London Stock Exchange. I was explaining the latencies to him, and he was like, "Oh wow, your matching engine speed is half the latency of the London Stock Exchange, and it's still in the cloud, right?" So it's like, it's cool. I mean, it's really good stuff, and the team actually, as they built this, I should just add this because it's a bit of a shout out for the team. They took loads of things that are kind of loads of applications that exist in the real world that are used in tons of companies, and you think about almost like piecing this together to build the front to back trading venue. A lot of it just wasn't fast enough. So this is like core infrastructure that's been like built to the best standards by Google, Amazon, and others. And my team have broken it down and gone, how do we make this 10,000 times faster? And so they've done that, and they've done that piece by piece by piece with so many bits of the infrastructure. And so we were kind of joking, you could probably launch 5 or 6 businesses from the tech that's been built here, because actually, if you were to roll it out, these are bits of software that's used in so many different companies that actually you could add huge amounts of throughput efficiency and like readability efficiency and everything else into it. So it's a real kind of I don't want to pat them on the back too much, but it's a bit of a masterpiece that the guys have done. So super proud of them. So that's the tech side, and then jumping back to the other piece, like the bit for me was on the regulation side of things, right? Because the way I kind of look at it is, you had the regulators are a bit unsure on what they want to do. You had the industry was a bit unsure on kind of what they needed to do, and it felt like someone needed to kind of take it, grab the bull by the horns a little bit and be like, okay, like this is what it needs to look like. And for what it's worth, I think we have a really good understanding of market infrastructure, a really good understanding of like traditional finance market infrastructure, capital markets, and I think we built a really good understanding of crypto finance as well, and trading, and what crypto natives care about versus institutions. And so we really tried to look at how do we piece all that together. So about 2 years ago, we embarked on a MiFID II license application. So, and this is 2 years ago, so it's a long time ago. And it was really we had a couple of goals, right? We wanted to list crypto derivatives, or kind of list securities. We wanted them to be for everyone. So we wanted to be in a position where we could offer them to retail and institutional customers. We wanted to be in a position where, from a clearing perspective, so actually like the capital efficiency of trading, it was really easy to do. And we wanted to do it in a way where actually, you can bring in these big tier one players who have basically had to sit on the sidelines for a lot of this. So it's like, how do you bring everyone together? So we embarked on this kind of MiFID II license, and really, I would say, and we've been doing it in the Netherlands with the AFM, the Dutch regulators, who are, by the way, fantastic. I think they've been really great partners throughout the whole process. So we've had a real a real kind of back and forth as we've done this. But really, what have we done? We've really defined the standards for crypto, like securities and derivatives trading. And so this is like perpetual futures, structured products, dated futures. It's the margining, it's the clearing, it's all of this like really complex infrastructure that needs to be in place for it to work. Like this is the stuff we've been working on. And so, we're kind of on the, I guess, kind of on the cusp of being granted this license. And I don't want to like front run it, but obviously, like all things being well, we're kind of expecting some good news on that hopefully soon. And really, what it allows us to do is it allows us to do a couple of things, right? So we can list securities, and this can be traditional securities. So we can do like equity derivatives, we can do bond derivatives, we can do crypto derivatives. We can trade them on what's called the organized trading facility or trading venue. So this is our trading venue where it'll be done. We can interact with retail or kind of sophisticated retail and institutions. So like everyone's in the same place, and with the proper controls and the proper checks and balances. We're not in a position where we're going to be offering like 100x leverage to retail customers where they don't necessarily know what they're doing and get blown up like every time there's like a 0.01% tick in price movements. Like it's actually like we've really thought about how do we set up the right products for the right customers and make sure we're protecting everyone and doing it in the right way. We can passport this, so we can basically we can really license, or we can market the product to retail and institutional customers in every jurisdiction in Europe. So that's a big thing as well, which no one else can do. So we can actually build a lot more awareness about like the products. The way we've set it up is the OTF, so that the kind of the regulated trading venue, it only ever touches cash. And that's really important, because what that means is whilst you have the spot trading venue, which sits over here, which is our crypto trading venue, and you have the regulated trading venue over here, which touches cash. That really opens the doors to these kind of tier ones coming in who traditionally have not been able to interact with crypto because they can't actually touch the crypto underlying. And without going too much into the regulatory landscape, these guys are like the big investment banks, for example, are systematic internalizers. Crypto hasn't been defined under MiFID in a way that they can actually interact with these things from a spot perspective, which is why they can't actually touch crypto as an underlying. So we have this cash settlement process. So it's all cash underlying in terms of how it's structured. Even if you're using crypto as collateral, it's still collateralized and traded into cash. So you have, now we're opening up the avenue for these really big tier ones to come in, whether as a prime broker directly on the exchange, whether as kind of potentially a market making on the venue as well, because really it's just listed securities trading. So you're really kind of like introducing that framework where, you have much greater participation. And then, the beauty of the license as well is like the way we're doing it, it's got a lot of equivalency internationally. So it allows us to kind of like play in other jurisdictions as well. Again, kind of like using the framework that we've kind of carefully thought through and worked through with the regulators. So it's a really long process. We're kind of getting to the end of it now. I'm really kind of like really, I think it's, for us, it's about it's about taking those really good standards, doing it in a really sensible way that we can kind of give competitive products that crypto natives are used to and institutions are used to, and do it in a way that we kind of keep everyone safe, but then offer the best of both worlds. So that's kind of like that's what we're doing. That's what we're doing on the licensing side, which is massive. And for me, I think it's really exciting. I'm obviously because it gives us, I guess, effectively two USPs. We are best tech, and we have a very unique licensing structure, which allows us to do things that no one else can.
But this is, as you say, it's massive, right? It's huge, and also like building this avenue for the players that couldn't invest before, or like couldn't play on the crypto playground before. I mean, this is a game changer. And doing this, I think one of your taglines is also crypto but regulated. So I think it's especially probably in the EU, it's so important. And it's also after like what we've seen in the last years, where everybody was probably afraid to touch even or like to speak about crypto. So this is huge. So for especially the part where you enabling now the institutions to come in, and is it something where you are like where you see the space heading, or is it like they are asking for years now and it was not possible before and now it's possible? So is it like,
yeah, it's a great question. I think we're totally on a turning point. I mean, there's a really good data point. A really good data point. If you look at Bitcoin futures open interest, and you look at the top five venues. In fact, if you go on, probably the best places like on the block or somewhere like that, they've got like a good summary of it. You can see for the first time, and this has only happened in November. So it's like the last 5 or 6 days, the CME is now jumped Binance as being the top trading venue for Bitcoin open interest, which basically means that you have for the first time definitive data that suggests that there's institutional buy-in for particularly in the securities and futures trading world, right? So I think you've seen everything happening with ETFs and everything else, but you're now seeing the CME, which was 8% of the Bitcoin futures market, or in the top five, a year ago, now above 30%. That's a trend line that's hard to ignore, right? And you can say, yeah, sure, Binance and others have lost market share, but I think there's desire to get behind an institutional setup and kind of be trading on these things. So for sure, I think directionally that's where it's heading. I think we've kind of always seen, particularly on the institutional side, far more interest in derivatives than spot. And I think that will kind of long continue, to be honest, and you'll kind of continue to see that engagement. But it's just about having the infrastructure and the regulatory framework that these guys can operate in, because I think that's it's always it's just not worth getting it wrong. There's you can make a quick buck, but so many of these companies are making so much money anyway. It's about having a structure that they can safely operate in, I think, is the big thing. So yeah, for us it's just how do you it's both worlds, right? It's how do you build something that works for everyone in the crypto native land, and then build something that works for everything on the institutional TradFi land, and try and smash something together that takes the best of both worlds, which is kind of what we're doing.
yeah, it's an absolute game changer. So, I mean, you touched on this, but how do you see the relationship between traditional finance and the crypto space evolving in the near future, like the next, I don't know, five years or so? Because I think there was, we also see a trend here, but how do you see this in the next years?
Yeah, I think I kind of break it into 2 points, right? So the first thing, I think there's really cool products that can be launched that don't exist yet. So I'd say that's if we just talk about crypto innovation for a second. I think one of the best things that's come out of crypto trading is perpetual futures. I think perpetual futures are just a great product. And obviously it's I mean obviously I'm sure everyone has an idea of what it is, but typically in I guess kind of real world TradFi, you'd have dated futures. So you choose a date in the future where you're settling the contract, or you have CFDs, so contract for differences, or you'd have ETPs. So and these are all kind of different derivative products that exist. And really, I think what crypto has done, which is fantastic, is it's created, and perpetual futures kind of existed anyway in kind of an FX flow. But now it's kind of the mainstream derivative product for every crypto asset, and I think it's such a good product. And one of the things that I think will happen, and I think we will push, is how do we take some of the innovations like crypto, perpetual futures, and take that to traditional assets. So it's also first of all, I think there's products and innovation that can go downstream into TradFi. So for example, I think an equity perpetual future is a better product than a CFD or an ETP. And those are kind of those are typically how retail engage with equity derivatives right now. And so this whole concept of actually being able to list equity derivatives and do perpetual futures, I for sure see a world in the future where actually equity perpetual futures are the mainstream way of trading equity derivatives. And it's a much easier way of can you imagine you just log on and you go at the weekend, I want to go short, or I want to go long company X before the, I don't know, the quarterly announcement on Monday. that's cool. That's a really good thing. It's hard to do right now, but actually market making, those type of products is doable. And it kind of takes equities more into kind of a 24/7 market, which is obviously, it doesn't work right now because obviously you have market hours and market close, but you can still market make outside of hours. Obviously the spreads just get a bit wider. So I think you have equity perpetual futures. I think and bond perpetual futures, and these other products, I think these start coming out, which are cool, good products. So I think you see that kind of as a transition. I think you see, you see kind of like changing in like how, I guess, kind of more mainstream adoption of like certain crypto assets. So, again, I don't foresee there's going to be this plethora of like hundreds of crypto assets in the future. I think you're probably going to have, a small number of winners who are going to be there, and they're going to be absolutely mainstream and embedded in the front to back fabric of financial infrastructure and day-to-day infrastructure. And I think, as these digital assets become collateral or exchangeable across so many different fronts, I think that becomes a great intersection for traditional finance and the crypto world as these things kind of come together. So I think that's kind of one thing. And then just maybe changing market infrastructure as well. I think, like, we've seen some really good innovation again in terms of how a lot of these exchanges are operated and how they can vary from like traditional finance, where you might have an exchange and then, like the CME, and you might have a CCP, so kind of a separate clearing house, which isn't very capital efficient because you've got to park your assets in there in order to trade. We're seeing a lot more kind of these prime broker models coming in, and like cross collateralization and using collateral as like in lots of different ways. And I think that's where that becomes like a really great intersection as well, which is great. And I think the last thing I would say is just like further democratization of products to retail. I think that's like the really cool thing that's come out of this. So, even, it started off like really, I think what crypto has demonstrated is that actually liquidity is good, right? And that's like if you think about all the use cases, like a lot of them, like some make sense, some of them I don't think make sense. But one thing that like is clear is that actually liquidity is good. And if you look at really, a lot of existing traditional finance markets, like let's take like private capital. So, this is private companies that aren't public. This is typically very liquid markets. A lot of the growth happens in the private stage before they go public, and there's not that many companies going public at the moment. So retail can't really invest in a lot of these things. But actually, and one of the big things, was always, well, actually, like, are we protecting, we've got to protect retail. They shouldn't be making these investment decisions because they don't really know what they're doing. I think actually what it's shown is, actually retail, broadly speaking, does know what they're doing, and liquidity is good, and it's proven like front to back that these things work. And so I certainly kind of see a use case for kind of, expanding that to more like private pre-IPO companies and taking it there. So I think you'll see it kind of goes both ways, right? I think you're going to have like cool crypto digital asset innovations going that way. You're going to see more kind of traditional finance becoming democratized. Obviously, you've got tokenization, seems to be very on brand at the moment. Everyone's like, this is the big thing. RWA gets thrown around a lot. I'm like, yeah, that's great, but I like I'd rather see a perpetual equity than a tokenized asset, in all honesty.
But that's a good point. I mean, there like if you look on like blockchain as a whole, there's so many use cases where like tokenization is like, of course, it's making also like maybe assets tradable, and it has some like connections to also traditional finance. But I like the way you see it, where like both sides are coming closer together, and you have like innovation both ways, and you take what's working in traditional finance and maybe bring it to like democratize it and bring it to more people, but also the other way around, and using this innovation for that we had in crypto and making products better. But if you, like you said, there will be probably a few winners, and I'm with you on that. Would you mind like naming a few, or maybe also the second part to the question is, do you see like other blockchains or cryptocurrencies still valid for like specific use cases? Because I think that's the difference. You can have like one blockchain for like that is just for tokenization, and it doesn't have to be a like a financial instrument, or you can have it for, I don't know, digital IDs or stuff like that. And then you will have probably very a few, just a few that are really used for the products you mentioned before.
Yeah, yeah, it's a great question. It's a hard one as well, right? I think it's the yeah, the reality is I'm like, am I holding, let's start with, am I holding lots of these crypto assets? No. I'm obviously a big believer in Bitcoin. I actually also think Ethereum is a great structure. If you look at the ecosystem that's in place there, if you look at kind of actually the upgrades and improvements that are constantly being made, I don't see a world where, obviously, like, Ethereum and Bitcoin are not there in the future. And so I think, if I was to place my safest bets, that's where they are, right? Outside of that, look, there's I think it's interesting. I'll phrase it slightly differently. I spend a lot of time with different foundations, and if I kind of summarize a lot of their problems, is if you think about what the foundations are doing, and in a lot of cases is their job is to spend money and build awareness, and they have these huge treasury war chests that they have to spend money and build awareness for their ecosystem. But what you're seeing a lot of projects that will go and be like, hey, I would like funding to build this on your layer one, and this is what I'm going to build. And they get the funding, and then they'll go and build it, and then they'll go to the next foundation and go, hey, we want to build this, and it's exactly the same thing, and they just keep on funding the same thing. And so you see these projects just jumping from foundation to foundation, but without real tangible use cases that kind of sit with them. And so, but you have this, like, we're building an ecosystem description, right? We have all of these projects that are being built on our thing, and there's a, in my opinion, there's a significant amount of vaporware there that's just not like, it's not like additive to kind of the real use cases. And it's like, I always think of like the use cases, the real truth and value of the use cases. If Solana goes down, what actually breaks? What real world things break? And I think we need to get to the stage where we're saying, if Solana goes down, these real world things break, and that's a problem. That can't happen, because actually, if that breaks, then there's a bigger issue. And so, I guess for me, it's like, which ones are going to fall in that? If this goes down, it breaks. If Bitcoin goes down, well, the whole ecosystem breaks. Like, we're done, right? We pack up and we go home. And I think that's one that you can kind of say from that perspective. If Ethereum goes down, actually, there's enough now that's on Ethereum. There's enough, like, real world use cases that are coming into play there that's an issue. If you kind of take it a step further, I think, like, Ripple, they're doing some great things in terms of cross-border payments. I actually think there's for sure, it's that they're breaking and building market share that's really hard to disrupt. So actually, as they continue to grow, I think they're going to be kind of a mainstay and, like, powerhouse in the future. I think that's really cool. I think you kind of go, like, again, like Solana. I think that, again, it's a really good setup. I actually think they have got some great use cases that are coming through now. It's becoming much more real world tangible. I think there's a lot there to be kind of excited about. Again, and there's probably maybe three or four that I would kind of add to that, where I'm like, actually, you have this maturity curve of, like, actually some really good projects and really good foundations that are doing all the right things that I think kind of fall into it. And then outside of that, look, I'm historically an asset allocator, right? So I'm inherently skeptical. So I'm very much like, prove me wrong. And I think there can exist, to your point, like, is there one for, is there a blockchain for, like, ID verification? I think it's really hard to win, like, full market share on something like that. So I think you probably end up with still fragmentation around that. And I don't necessarily know how that would work out, in terms of, you're probably going to have some intersect between, like, that's much more of a tougher one for governments. You're going to have much more government engagement, and then they'll want to back winners, and so it's a bit messy. So I think it's almost like pick the use case and decide whether you think there's kind of a blockchain that would really kind of make sense to scale into that internationally and kind of win the market. So I don't know if that answers your question particularly well, but I'm probably dodging a little bit there. But that's the summary.
No, but absolutely no. I think there are some great points in there, and also like to hear from your point of view, especially to that you are skeptical, and the question. I love the question, like what's breaking down or what's breaking if like one blockchain or one cryptocurrency doesn't exist anymore. And I think that's a good way of seeing it, especially when times get more like in a bull market and everyone is euphoric and everyone like there's a lot of noise and everyone shouts and then to take a step back, and we have seen this over the last, I mean, probably the cycles are not that probably not that turbulent anymore, and I hope we learned, but still there will be stuff like this, right? And so and then to take this position, or like I totally agree on the safe bets, and everything else is probably or is definitely more risky, and you should be aware of what you're doing, or you should be aware of that you probably just, I don't know, are in a casino, right? So yeah, thanks a lot on your point for this. So what's next for one trading? You mentioned like the license, and I think you like the whole like what you explained and the tech part and the relation part. I mean, they are huge. So what's next? What's coming up in the like next weeks or months where we can look forward to?
Yeah, so I mean, next week's so in the coming 2 weeks, we're going to launch fast. So we're going to launch this new trading venue. So we would love everyone to come and test, try and break it, see how it compares to kind of the rest of the industry, and yeah, we're kind of really excited about that one. So that's kind of immediate milestone. I think number one. I think, and then for us, look, the goal is obviously kind of hopefully kind of conclude our license setup, and then look to kind of start rolling out some cool products. I think that's the thing. I think we're not looking to just repeat what's there. I think that's probably what I would say. We're looking at kind of what can we do that's kind of different, that adds a bit of excitement to some of the products that are coming out. So we're whilst we're looking at obviously doing perpetual futures, we're looking at structured products. We're looking at some really interesting and cool ways of doing things. Like we're one of the things we've discussed is a 10% kind of an 8 to 10% yield like money market fund product, which is a really cool structure, which is like a tokenized money market fund with a couple of wrappers around it, which we can again like list of our license hopefully and kind of and look to kind of push some of that stuff out. So I think it's just trying to do bring some good products that kind of protect customers and give them some real kind of opportunities to I guess kind of do more with their earnings. I think that's it. What I would say.
Awesome. So a lot of innovation to come there, and yeah, we of course have all the links in the show notes, so you can just click there and sign up, and yeah, as you said, like play around, try to break stuff. And we also got, if you signed up and if you then click also on the PoApp bot, then you can leave your email and we raffle some merch, so you can have your new favorite next generation trading venue also on your chest. So Josh, thanks a lot for all the insights, for your take on also the industry, on where it's going, and especially with your experiences in traditional finance and what you're building now. I think it's awesome. I really look forward to it. So would you like to share like one final thought, or like maybe an advice, a suggestion, a tip, a question for our audience today that they can leave with?
Yeah. Well. First of all, thank you for having me. I think that goes without saying. I think it's been an enjoyable conversation, and I always like to talk about these things. I'm probably somewhat passionate, as I suppose you have to be. Look, I think parting thought is more just I think think, obviously bull market looks like it's getting more likely that we're heading in that direction. Obviously, like, be cautious. I think the scars are there. So I'd always just be preface that with, like, be cautious. Don't invest your life savings. Don't invest anything you can't lose. But look, I think parting point is there's some really cool stuff that's going to start coming out from us, from other people as well. I'm sure as kind of the industry matures. I think we'll see consolidation. I think we'll see fewer venues, and we'll see, actually a smaller group of really good, high quality companies that will really kind of go out of their way to protect customers and their assets. And I think for all the listeners and anyone who's in the space, I think that's really where, in my opinion, you should be kind of focusing your time and effort if you're looking to kind of partner with anyone. I think, like, always think about what are the motives of you're working with, and are they set out to kind of to kind of look after you? Because I think that's been, we want to move away from the industry now where people are just getting wrecked by crappy companies. That's the goal.
Yeah, what a great end to this conversation. I enjoyed it a lot as well, and then I can tell you're really passionate about it, and then let's. I'm looking forward to what's coming, and thank you again. Until the next time, peace and out.
Thanks, man.
Noch ein kurzes Schlusswort in eigener Sache. Wenn du im Bereich Web 3 und Metaverse auf dem Laufenden bleiben möchtest, dann abonniere den Web 3 Plus N Newsletter, denn dort bekommst du 3 Tipps, Anregungen oder Gedanken von mir und das N, die News der Woche, also einfach in Bullet Points ganz knapp und knackig zusammengefasst, alles, was gerade passiert. Du bekommst einen Einblick hinter die Kulissen und hast so aktuelle Entwicklungen des Web 3 immer im Blick. Das Ganze direkt in deine Inbox, ohne 24/7 auf Twitter oder Discord aktiv sein zu müssen und damit in weniger als 5 Minuten pro Woche. Der Web 3 Plus N Newsletter, den Link findest du in den Shownotes. Und ja, wenn dir diese Folge gefallen hat, abonniere den Podcast, teile die Folge gerne mit Freunden oder auf Social Media und hinterlass eine Bewertung. Ich stecke sehr, sehr viel Energie und Herzblut in den Podcast und damit würdest du meinen Gästen und mir unglaublich weiterhelfen. Danke dafür, bis zum nächsten Mal. Peace and out.